Okay, recap for Wednesday, the 10th of January 10th of June 2026. Mind you, I'm tired, but this is a good recap, I guess. 17 off for the day, 450 points. It's almost like I know what I'm doing, you know? Anyway, let's get into the recap. I got a badass headache and I'm trying to get this done quickly and just explain what I saw in the market, why they're short, blah 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 blah, and yeah, what was my expectations. So let's get rid of all this jumble because if you're not me, you don't understand any of these boxes because they're not annotated. But I can understand every single one of them without referring back. So I'll try explain some of them quickly. I'm not gonna explain all of them because that's gonna take a while. And let's start with the daily. Let's take everything off. Once we come into the day, right? We had our wick, right? Like if you looked at the daily candle, New York, it was around here, right? And just looking at the daily, especially that yesterday we had this ginormous 1600 points of a daily range. I expected today to be an inside day. This an inside day means we're not going to take previous daily high and we're not going to take previous daily low. However, I'm expecting us to work our way towards previous daily low as that is the drawn liquidity for me, but not necessarily not necessarily get it for today. Okay, so just bearish. Why? Because of the market structure. If we're looking at the daily, we're delivering from an inversion here and on here specifically, and on Q, the lower quadrant of a daily series. That is very strong, and it normally doesn't just stop with one wick down, right? We're of course gonna have a reaction to stuff on the opposite side, right? So, for example, the SPICY, and that's why we had a retracement, but that doesn't mean we're not overall bearish, right? We're gonna continue with destruction. Anyway, so now we understand that higher time frame we're bearish. What is the 4 hour offer? Well, the 4 hour has a clear SIBI inside it. I'm not really interested about the SIBI. It's cool, right? I want us to get into it, but I'm interested in this 4 hour volume imbalance. It's opened by like a wick. I mean, not a wick, a tick, right? So I'm including the high till the low of the volume imbalance, knowing that it's the area that I'm looking for inside the SIBI, right? This is what I expect price, right? I expect two things for today because it's an inside day, right? We could either make relative equal highs, come up to these, and then deliver lower. Then tomorrow we'll actually come take previous daily high and then come down lower again, and then on Friday deliver the whole thing by taking this low, right? That's scenario one. Scenario two, we actually just take out the highs today. I'm talking like an absolute retard right now because I got my retainers on. If I'm stuttering words, I'm just saying words not clearly. That's why. Anyway, second expectation is we just clear out all the highs today and we just deliver lower, and we're gonna have an extremely bearish week. So that is the two scenarios. Regardless, we're not gonna take previous daily high or previous daily low today, right? That's my expectation. So once we come to the 1 hour, we need to know when we're gonna stop, where we're gonna stop, right? And again, it's the same thing here on the hourly. However, we used it here, so I don't expect this, right? If we go back and if we just slap the hourly one, right? We've already used it here. I don't expect this to go all the way up because looking at this structure, this is a balanced price range. And when I say use it here, I'm mainly talking about the breaker, right? This is the breaker, right? And I'm including it as the wick because on the lower time frame, it'll be like an actual candle. and I have only the wick highlighted because this is like the sensitive area. And when you look at it in the lower time frame, you would see that we used it and we delivered lower. So I don't expect this to return back to the breaker. However, on the ES, I completely expect this to come back to the breaker because we didn't use it even in like the lower time frame, right? It's kind of highlighted on the 4 hour, 1 hour, 15 minutes. I don't know which time frame we used to highlight the breaker, but I genuinely can't remember what time frame we used to highlight it. So regardless, anyway, it was highlighted, right? I can't be asked to find what exactly used, but anyway, that's what we went up to for years, and that's what I expected the high to be. They used the break on this. What did I use here? What am I highlighting? I actually want to know. Yeah, this 4 hour break. Okay, I'm just being I don't know, being retarded. Anyway, that's what I expected price to return to, and ES was a cleaner chart, and that's exactly where we get our high of the day. Yes. Anyway, going back to NQ. Now let's drop to the 15 minutes. So we expect roughly where our high of the day will be. Well, we're gonna try use ES because it's the cleaner one, right? This was something that was going to be, because I remember there was two scenarios. We're going to make the relative equal highs. So if we're going to make the relative equal highs, we're going to stop at this, right? And if we're not, we're going to go up higher to the inversion. But I'm specifically looking at one thing really, and it's in the 1 minute. Yes, cool. This is the break we've already used, and you can see that we used it here in this run up perfectly. We not tap it here, we tap it on the NQ, by the way. We do miss it by like a point. So that is suspect in case we do the same scenario if we don't take the low and we actually want to clear out this is relative equal highs for tomorrow. But anyway, we're heading on Q. That's why I do much volume. And I'm watching this gap, right? Because in this whole run down, the only CB that wasn't really returned to, if we'll try and look for higher, was this. And I wouldn't want this high to be taken because that would be a genuine market structure shift for me, and I would expect that if I'm still bearish. Taking that high would mean we're not bearish anymore. And because this range is small, I would be inclined to take the BC, like the inversion, especially that we don't really use it after, right, in this candle. So that's why I have highlighted and extended. So I'm trying to get just the general area for NQ because I can't be too precise with it right there. And this was the initial trade, right? So we open up at 9:30 and let's have this in regular trading. As you can see, we have our sell side 4 p.m. We have our initial sell side, which is going to be another time frame, and we have these for buy side, right? So this high specifically, this high actually, which was technically PM buy side for yesterday's price action. So we went up and took Asia buy side, London buy side, our initial buy side, and we also had CPI high, right? So we took every single buy side possible in what I call, like, I don't know, the time liquidity or whatever you want to call it. Anyway, once we take all that buy side, I'm here waiting for the short. So the first run up into it, I'm like, alright, that's cool, but I'd expected a deeper run. Let me watch if we genuinely break the market structure here, right? So I have a small what do you call it, gap, but I'm watching ES and ES doesn't reach, or does it reach? I think it does reach at the same time. So it reaches its breaker. NQ which is what I assume it would be this, but it's outside of time, right? It's at 10:30. It's a bit too early, right? Normally I would expect it at like 10:40 where we're gonna make the return, because if we're not gonna do it early here, right? And like I said, this was my initial trade. We go up, right? I take the small inversion. It comes down. I'm watching it because I need to be careful, because if it's not going to do it now, it's going to have to come back higher, and that means scenario one is done. And because I know that option, the second that it starts going down, I'll go break even. And once it took the low with a sweep and start coming back up, I closed the trade because I knew it's not time yet, and it's not going to be done on the 950 macro, so it's going to be done on the next macro, the 1050 macro. Anyway, we go up higher, and then now we break down with an SMT. This is what I was waiting for, this SMT. ES already hits the breaker. NQ now hits what I'm looking for, specifically the CE of that buy-side imbalance, sell-side inefficiency. Comes down, and then now I need to wait for it to confirm, right? So let's get rid of this, don't need it. And I'm waiting for this to act as an inversion fair value gap. It doesn't have to act as an inversion fair value gap instantly, right? Because if there's something up to go for, right? And if there's something up to go for, think about this range as like a mini, right? Coming back to discount, right? Discount coming to the fair value gap in that discount, right? Think about this as like, I don't know, a 15-second 2022 model, if that makes any sense, right? Market structure shift, coming back to the fair value gap in discount, type of thing, right? Just, I don't know if you understand what I'm saying. But we come back to this small one, right? As an institution order flow entry drill, look at it. I just one bat, smack it, and then start dropping down. Once it starts dropping down, I already knew what this is going to be. It's going to act like an inversion fair value gap. So once it starts dropping down, it touches the low and it starts going back to midpoint. You probably could see this in like the 15 seconds. Right there. So it slaps it down and it starts going back. This candle just went back and then closed down here. So I get my fill at midpoint of the inversion fair value gap. And I have my stop loss at this high because this was an institution order flow entry drill, and I don't expect it to get to that high, and I'm expecting this to act as an inversion fair value gap now. So, boom, slaps the low of it and starts going. If you wanted the real trade, the one that's basically guaranteed, I would say take this SIBI with the breaker block right here. This would probably be the best, highest probability trade, right? And you know, I already entered earlier because the volatility was crazy and I was not trying to have a bigger stop loss, so that's why I was trying to like enter, but you don't need to do all that. Anyway, now once we get the entry, what are we expecting for TPs? Well, to know that the trade is confirmed, we just need to wait for this SIBI to close below, not just close below, for it to act as an inversion to a value gap, right? And you can see it comes down, doesn't, and now it starts acting as an inversion fair value gap. Once I seen this, I knew it's a done deal because I'm waiting for one candle to close below the main area that I was like, okay, earlier in my day, I was like, if this closes below, this would offer a nice entry, and coming from the first presented fair value gap, it would do it, right? I already seen it. That's why I'm not too focused on jamming my stop loss or whatever, right? Stop loss at this high because covered by this inversion. Once this acts as an inversion, I'm done with it. And then stop loss can be at this high. And I'm just trailing down and I'm waiting for this low, right? Because this initial low is my target for today. And below it is this 15-minute SIBI, BISI, right? As the final target for today. And then after that, I would be greedy to not like take my profits, right? I mean, it's still would be like what, nearly 600 points. But because I know that the market is volatile these days, I'm trying to let stuff run. So we come down, right? And then I'm expecting a return back to the first presented fair value gap. That's what should hold us. We come back up, it holds us, go back down, make relative equal highs, and then drop. See, now I have to watch carefully because if we don't come down to this low, right, that means we're basically done for the day. It hits this CB, comes back down, makes this order block. I'm watching this order block. The second that it hits the opening price, I'm out. I'm done. Because after that, of course, it's going to come back for the highs. That's why my stop loss was trailed after this run down. So I'm not just going to watch it hit my stop loss for no reason. And then after that, we just meandering around, and eventually at like end, we hit the TP. I'm not watching this specifically because of the probability just fell off the chart the second that we hit the opening price here. So yeah, I mean the closing price. But anyway, that's it really for the day. It is a bit disappointing that I didn't hit the TP that I wanted, but it hit most of the TPs, and that's really it. I got the trade from basically the high to basically the low without waiting for too long, right? So that's good in my books. Of course, there's more stuff, right? And in like the other time frames, but I genuinely do not have the time to explain all of it or even the effort right now because I'm just, like I said, tired, headache is just cooked. But yeah, like I've been saying for the last week or two, that the market is finally back and you should expect targets that you expect to hit to be hit, and it could have a lot of magnitude. One tip for today, just because we had that large opening range day, you should expect this type of morning session, right? The morning session after a large opening range day would not be the nicest. And that's why I feel like, I don't know, if you try to like do a lot of shorts, you would probably got cooked before waiting for the time. So just wait for time, right? If it's like 1050 macro kind of setup, it would normally present itself after like 1040, right? And you see like there, 1040, boom, we're presenting the setup. That's the one that you can trust because I know people might have taken this and got cooked, and you should not take this type of inversion without hitting the rejection block. Stupid. And for this one, it's just, that you should have really just waited for the break entry. Unless you're really, really confident and you knew what was going to happen. So yeah, it is what it is. Anyway, that is the market recap. I don't think there's more to explain. I didn't even know it was CPI until it was too late. I can't lie, because when I checked the ES and I was like, "What is that big wick?" And I realized, wait, it might be news, and it was CPI. So there was a lot of confluences to go lower. It was obvious that it's grinding higher as some sort of manipulation to go lower, and eventually, with relative equal lows, I hope they stop it here and then open the market and jam it straight back up for tomorrow so we can have another shorting day. So just think about this, it's just distribution lower. I don't expect us to break the highs, right? If we want to, it's still bearish as long as we keep this intact. Now we made these kind of relative equal highs, which I don't expect it to go all the way up there, but it can if it wants to. But on the daily, specifically that we closed today, I'm looking at this to act as an inversion fair value gap should we come back into it now, right? Before, like it's the same thing. Like let's say you're trying to take this on the daily as an inversion. No, you'd had to wait for, think about this same thing that I showed you in the lower time frame. Basically coming back to discount, and then now once it hits the low or whatever, now you expect it to act as an inversion fair value gap. Same thing basically on the daily, and you can see that lines up very nicely in this area for this, and it would take up all these highs that are trying to run down. So I'd be watching this BC for tomorrow mainly, and somewhere in here as an inversion if it wants to come back all the way, because even though these highs are kind of taken here, they're still somewhat clean, right? We still have our lunch high and our PM high as an easy target. Should we not, break this low? If we break this low, then we don't really need to come all the way up there. So, yeah. Anyway, that's the market recap. It's been a nice week. I don't know if I'm thinking about wrapping it up for the week. Let me just double check a few things. Coming back up there would be a hard sell, but it's possible that if it's just bearish that we're gonna treat this wick, especially if I wake up tomorrow and we're like gone past it, then just grade the wick. Don't bother about the inversion because it's too far up there. Yeah, So yeah, that's the market recap. Like I said, um, just expect continuation bearish, right? Don't be trying to all retracement trying to go higher now. I believe we're done going up. That's what I believe, right? You do what you want to do, but I believe start looking at shorts because we clearly had some sort of capitulation here, and this is just not a normal way to go up. If you want to see a normal way to go up, this is how we kind of go up in a bullish market. How we go down in a bearish market, this is how we go down in a bearish market. We don't do this, right? We don't do this, right? This is not how it works, right? So anybody trying to chase this will get cooked probably even faster than this, right? Faster than this. Like at a certain point, once we hit let's say this kind of this range, somewhere here, then you maybe could expect the slowing down. But until then, expect the volatility to be high, right? I feel like I've done more than enough now. So yeah, that's the market recap. Let me wrap it up. Peace out.